Based on the provided data for Bitcoin, a short-term investment strategy appears to be the most suitable approach. The forecast price suggests a slight upward movement in the coming week, but the historical price data indicates a period of volatility. A short-term strategy allows for capitalizing on these price fluctuations within a shorter timeframe, minimizing exposure to potential long-term market risks. Therefore, a strategy involving a long position could be implemented. An entry point near the current price of around $95,000 would be appropriate. A stop-loss order could be set at $93,500 to protect against significant downside movements. The target price could be set at $97,500, aiming to capitalize on the predicted upward price movement. This strategy leverages the potential for short-term gains while mitigating risks through a well-defined stop-loss order. Based on the provided information for Bitcoin Cash, a cautious short-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with recent dips, and the forecast suggests a slight downward movement in the coming week. While the support price at $435.50 provides a cushion, the resistance at $516 indicates a potential ceiling for upward movement. Therefore, a short position with an entry price around $445, aligning with the recent price action and the forecast, would be advisable. A stop-loss order should be placed at $455 to limit potential losses if the price unexpectedly rises. The target price could be set at $430, anticipating a moderate decline towards the support level. This strategy allows for capitalizing on the potential downward movement while managing risk effectively. Based on the provided price information for stacks, a cautious investment strategy is recommended. The 2-week price history reveals a downward trend, and the 1-week forecast predicts further declines. While the support price is at $1.571, the forecast's lowest point is $1.46, indicating a strong possibility of the price falling below this support level. Therefore, a short-term investment strategy focusing on a short position is advisable. An entry price of $1.62, close to the current price and above the support level, would allow for potential profit if the price drops towards the forecast's predicted lows. The stop-loss should be set at $1.68, slightly above the entry price, to minimize risk. The target price should be $1.50, aiming to capitalize on a significant portion of the anticipated decline. This strategy prioritizes risk management and capital preservation while seeking to profit from the bearish outlook on stacks. Given the price trends and forecast for Ethereum, a moderately aggressive investment strategy would focus on a short to medium-term approach to capitalize on the expected consolidation and potential upward movement. The historical prices show a period of consolidation with slight fluctuations, indicating a lack of strong directional momentum. The forecast suggests a slight upward trend, with prices potentially reaching around $3,470 within the next week. The support price at $3,340.26 provides a safety net for potential dips, while the resistance at $3,628.50 suggests that significant upward movement might be limited in the short term. Therefore, a long position is advisable in this scenario. An entry price around $3,370 would allow you to enter the market near the current price and benefit from the potential upward movement. The stop-loss should be set at $3,340, slightly below the support level, to minimize potential losses. The target price could be set at $3,470, aligning with the forecast and offering a reasonable profit target. This strategy balances risk and reward, aiming to capture a moderate gain within a short to medium-term timeframe. Based on the provided information for Ripple, a short-term investment strategy appears most suitable. The historical price data demonstrates a volatile trend, with recent fluctuations suggesting potential for short-term price swings. The forecast price indicates a continued upward trajectory, reaching $2.58 within the next week. This suggests a potential opportunity to capitalize on the anticipated price increase. Considering this, a long position is recommended. An ideal entry price would be around $2.34, aligning with the recent price action and providing a buffer below the support price. A stop loss should be set at $2.18 to protect against unexpected price drops. The target price could be set at $2.50, allowing for a reasonable profit margin while staying below the projected peak. This strategy aims to capitalize on the short-term upward momentum of Ripple, balancing risk with potential reward. Given the provided price information for Binance Coin, a medium-term investment strategy appears most suitable. The historical prices demonstrate a clear upward trend, with recent fluctuations around the $700 mark. The forecast suggests continued growth, with prices potentially reaching $715 in the coming weeks. This indicates a bullish outlook for Binance Coin in the medium term. Therefore, I recommend a long position on Binance Coin. An ideal entry price would be around $705, aligning with the current price and the support level. Setting a stop loss at $703 would protect against potential short-term dips, while a target price of $715 allows for capturing the anticipated upward movement. This strategy balances risk and reward, aiming to capitalize on the projected growth of Binance Coin over the next few weeks. Given the price trends and forecast for Stellar, a medium-term investment strategy appears most suitable. The historical price data shows a period of consolidation, followed by a recent upward surge, indicating potential for continued growth. While the forecast suggests a further increase in price over the coming weeks, reaching potentially as high as $0.469, it is prudent to adopt a measured approach rather than a purely short-term speculative one. A long position is recommended to capitalize on this potential upward movement. An ideal entry price for this strategy would be around $0.427, aligning with the recent price surge and providing a good risk-reward ratio. The stop loss should be set at $0.404, slightly below the support price of $0.424, to minimize potential losses in case of a price reversal. The target price could be set at $0.5543, representing the resistance level, allowing for substantial profit if the forecast proves accurate. This medium-term approach allows for potential gains while mitigating risk through a well-defined stop-loss strategy. Based on the provided price information for Toncoin, a short-term investment strategy appears to be the most suitable approach. The historical prices indicate a recent upward trend, but the forecast suggests a slight pullback in the coming week. The current price is hovering near the resistance level of $5.822, making it a potentially vulnerable point for a short-term decline. Therefore, I recommend a short position on Toncoin. An aggressive entry price could be around $5.78, aiming to capitalize on a potential dip towards the support level of $5.516. Setting a stop loss at $5.85 would protect against unexpected upward movements, while a target price of $5.55 could offer a reasonable profit margin before the price potentially rebounds. This strategy capitalizes on the anticipated short-term correction while mitigating risk with a well-defined stop loss. Based on the provided Cardano price history and forecast, a moderately aggressive investment strategy suggests a long-term approach. The historical price data shows Cardano has experienced volatility but generally trends upwards. The current price is near the support level of $0.8498, indicating a potential buying opportunity. The forecast predicts a gradual increase in price over the next week, reaching 95 cents. Therefore, a long position is recommended to capitalize on this potential upward movement. An entry price around 87 cents would allow for a healthy margin above the support level. A stop loss could be placed at 85 cents to limit potential downside risk. The target price should be set at 96 cents, aiming to capture a significant portion of the projected price increase while remaining below the resistance level of $1.0217. This strategy balances risk and reward, allowing for potential long-term gains while mitigating potential losses. Based on the provided Litecoin data, a short-term investment strategy appears promising. The historical price data shows a recent upward trend, but the forecast suggests a slight pullback in the coming week. This indicates a potential opportunity to enter a short position, aiming to capitalize on the anticipated price decline. The support price of $98.46 acts as a crucial floor, while the resistance at $109.75 suggests a potential ceiling for the upward movement. Therefore, an aggressive short-term strategy would involve entering a short position at the current price around $100, with a stop-loss set at $103 to limit potential losses if the price unexpectedly surges. The target price for this strategy would be $98, aiming to capture a profit from the predicted price decline. This approach leverages the short-term price fluctuations while mitigating risk with a well-defined stop-loss order. Given the provided historical price data and the forecast for SWAY coin, a cautious yet optimistic investment strategy appears most suitable. The price has shown a slight downward trend over the past 2 weeks, but the forecast indicates a gradual upward movement in the coming week. This suggests a potential for a short-term rebound. Therefore, a long position is recommended to capitalize on this potential upswing. An ideal entry price would be around $4.25, slightly above the current price and below the resistance level. A stop-loss order should be placed at $4.0892, the support price, to minimize potential losses. The target price could be set at $4.49, aligning with the highest forecasted price for the week, allowing for a reasonable profit margin. This strategy balances risk and reward, aiming to capitalize on the predicted price increase while safeguarding against significant downturns. Based on the provided price history and forecast for Aptos, a short-term bearish investment strategy appears most suitable. The historical price data shows a fluctuating trend with a downward bias over the past 2 weeks. The forecast further reinforces this bearish outlook, projecting a continued decline in price over the next week. This suggests that the market sentiment is currently negative, and investors are likely to sell off their holdings, driving the price down. Therefore, a short position on Aptos is recommended. An aggressive short-term entry price would be $9.10, aligning with the recent price action and providing a margin for potential price fluctuations. The stop-loss should be set at $9.30 to mitigate risk in case the price unexpectedly surges. The target price should be set at $8.70, which is slightly above the projected lowest price in the forecast, allowing for potential profit-taking before the market potentially reaches strong support levels. Based on the provided price history and forecast for SAY, a short-term investment strategy appears to be most suitable. The historical price data shows a downward trend in recent weeks, with the forecast indicating further declines. While there is support at $0.3963, the price is currently trading below its recent highs, and the forecast suggests it may continue to fall. Therefore, a short position would align with this bearish outlook. An aggressive short-term investment strategy could involve entering a short position at the current market price, with a stop-loss order set slightly above the current price to limit potential losses. The target price could be set around $0.3963, the support level, aiming to capture a portion of the anticipated decline. This strategy carries higher risk due to its short-term nature and reliance on the price continuing to fall. However, if the forecast proves accurate, it could yield significant returns in a short period. Based on the Ethereum Classic price information, a short-term investment strategy appears to be the most suitable. The price history shows a slight downward trend over the past 2 weeks, and the forecast predicts continued stability around the support price. The resistance level is relatively high, suggesting limited upward potential in the short term. Therefore, a short position is recommended. An entry price of $25.90, slightly below the current price, allows for a quick entry into the market. A stop-loss should be set at $26.20 to protect against any unexpected upward price movement. The target price is set at $25.50, aiming to capitalize on the potential downward price movement within the short term. Given the price trends and forecast for Polygon, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $0.4736. The forecast indicates further potential decline towards $0.459, suggesting a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated price decrease. A suitable entry price would be $0.475, slightly above the current price and the support level, allowing for a small margin of safety. The stop loss should be placed at $0.485 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.452, aligning with the lower end of the forecast, providing a reasonable profit target. This strategy aims to take advantage of the short-term bearish momentum while managing risk effectively. Given the price trends and forecast for EVO, a medium-term investment strategy appears most suitable. The historical prices show some volatility but generally trend upwards. The forecast suggests a slight dip followed by a gradual increase. This indicates a potential for modest growth in the medium term. Therefore, a long position is recommended. An entry price around $0.365 could be considered, aligning with the current price and below the recent high. A stop loss at $0.358, slightly below the support price of $0.362, would protect against unexpected price drops. The target price could be set at $0.388, aiming to capture potential gains towards the recent high and above the forecast average. This strategy allows for potential profit from the expected price increase while managing risk through a well-defined stop loss. Based on the provided price history and forecast for optimism, a short-term bearish strategy appears to be more suitable. The 2-week price change demonstrates a downward trend, and the forecast indicates further declines in the coming week. While the support price offers a potential floor, the resistance level suggests limited upward potential. Therefore, an aggressive short-term investment strategy would involve opening a short position at the current market price, around $1.82. A stop-loss order should be placed at $1.88 to minimize potential losses if the price unexpectedly rises. The target price should be set at $1.75, slightly above the support price, allowing for profit-taking before the price potentially rebounds. This strategy aims to capitalize on the anticipated downward movement in optimism's price within the next week. Based on the provided price history and forecast for STRK, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with recent declines, while the forecast indicates further downward movement over the next week. This suggests a bearish outlook in the short term. Therefore, an investment strategy focusing on a short position in STRK is recommended. A suitable entry price would be $0.475, aligning with the projected price decline. To manage risk, a stop-loss order should be placed at $0.483, slightly above the entry price, to limit potential losses if the price unexpectedly rises. The target price could be set at $0.464, the lowest projected price in the forecast, allowing for profit-taking before the potential price reaches major support. This short-term strategy aims to capitalize on the anticipated price decline in STRK. Given the price trends and forecast for Solana, a medium-term investment strategy appears most suitable. The historical prices show a fluctuating trend with a general upward bias, while the forecast indicates a continued upward movement. The current price is near its support level of $197.53, suggesting a potential buying opportunity. The resistance level at $213.67 indicates an achievable target price for this medium-term strategy. Therefore, a long position is recommended for Solana. An entry price of $195, aligned with the recent price action and near the support level, would be ideal. A stop loss at $190, slightly below the entry price, helps mitigate risk. The target price should be set at $210, allowing for potential profit-taking before reaching the resistance level. This strategy balances risk and reward, aiming to capitalize on the anticipated upward movement of Solana over the medium term. Given the price trends and forecast for Jupiter, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a fluctuating trend with recent dips, but the forecast suggests a gradual upward movement over the next week. The support price at $0.7993 indicates a potential floor for the price, while the resistance at $1.0505 suggests a ceiling for the short term. Therefore, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An entry price of $0.843, aligning with the recent price action and the forecast, would be appropriate. A stop loss at $0.814, below the recent dip, would protect against significant price drops. The target price could be set at $0.925, a conservative target that allows for profit taking before reaching the resistance level. This strategy aims to capture the potential upside momentum of Jupiter over the medium term while managing risk effectively. Based on the provided information for Render, a short-term investment strategy appears most suitable. The price history demonstrates a volatile nature with recent fluctuations. While the forecast predicts a slight upward trend, the historical price data suggests potential for short-term corrections. Therefore, a short position could be considered, aiming to capitalize on any pullbacks towards the support price of $6.793. An entry price near $7.22, close to the recent high, would allow for a reasonable risk-reward ratio. The stop loss should be placed slightly above the entry price, around $7.35, to limit potential losses. The target price could be set at $6.81, aligning with a potential short-term correction. This strategy aims to capture a modest profit within a short timeframe, taking advantage of the anticipated volatility in Render. Given the price trends and forecast for Solana name service, a cautious investment strategy would focus on a short-term approach. The historical prices show a fluctuating trend, with the current price hovering near its recent lows. The forecast suggests a slight downward movement in the coming week, with prices potentially dropping below the current level. This indicates a neutral to slightly bearish outlook in the short term. Considering the price information, a short position could be considered with an entry price around $0.251. The stop loss should be set at 26 cents, slightly above the current price, to protect against any unexpected upward movement. The target price could be set at $0.244, aligning with the support level and allowing for a modest profit if the forecast holds true. This strategy prioritizes risk management and capital preservation, aiming for a small gain in a volatile market environment. Based on the provided price information for Doge-Coin, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a fluctuating pattern with recent dips, indicating potential for further decline. The forecast price also suggests a slight downward trend over the next week. Therefore, an aggressive short-term strategy would involve taking a short position on Doge-Coin. A suitable entry price would be around 32 cents, aligning with the current price and the potential for a slight dip. The stop loss should be set at $0.325 to minimize potential losses if the price unexpectedly surges. The target price could be set at $0.313, aiming to capitalize on the anticipated downward movement towards the support price. This strategy aims to capitalize on the short-term price fluctuations and secure profits before the market potentially reverses. Given the price trends and forecast for PEPE, a medium-term investment strategy appears promising. The historical prices demonstrate a fluctuating pattern with a slight upward bias. The current price is hovering near the support level, suggesting potential for a price rebound. The forecast indicates a gradual increase in price over the next week, aligning with the potential for an upward trend. Therefore, a long position is recommended for a medium-term investment horizon. An entry price around $0.0000184 could be considered, allowing for some room to capture a potential price increase. The stop loss should be set slightly below the support price, around $0.0000179, to minimize risk. The target price could be set at $0.0000205, based on the recent price high and the forecast, aiming to capture a significant portion of the potential price appreciation. Given the provided price information for SHIB, a cautious investment strategy is recommended. The 2-week price history shows volatility, with fluctuations above and below the current price level. The forecast suggests a slight upward movement in the coming week, but the price remains relatively close to its support level. Considering this uncertainty and the potential for further consolidation, a short-term investment perspective is more suitable. A long position could be considered with an entry price near the current market price, aiming for a target price slightly above the forecast's highest point. However, a stop loss should be placed below the recent support level to limit potential losses in case of a price reversal. This strategy allows for participation in the potential upside movement while mitigating risk associated with the volatile nature of SHIB Inu. Given the price trends and forecast for Doge-Coin, a cautious investment strategy would focus on a short-term approach. The historical prices show a mixed trend with recent fluctuations. The forecast suggests a potential decline in the price of Doge-Coin over the next week. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $1.90 would allow you to enter the trade near the current price, while setting a stop loss at $1.95 would protect against any unexpected price recovery. The target price should be set at $1.75, aligning with the lowest forecasted price, allowing you to take profits before the market hits potential support levels. Based on the provided price information for Doge-Coin, a short-term investment strategy appears to be most suitable. The 2-week price history shows a fluctuating trend, but the forecast suggests a slight downward movement over the next week. This indicates a potential for profit by taking a short position. The current price sits near the support price, suggesting a possible bounce, but the forecast and historical volatility suggest a higher likelihood of a decline. Therefore, a short position with an entry price around $0.00645, a stop loss at $0.00659, and a target price at $0.00625 would be a reasonable strategy. This entry price allows for a small margin above the current price to avoid immediate losses, while the stop loss protects against unexpected upward movement. The target price is set slightly above the forecast low, aiming to capitalize on the anticipated decline while mitigating risk. This short-term strategy allows for potential profit within a week, aligning with the forecast timeframe and minimizing exposure to prolonged market fluctuations. Given the price trends and forecast for Near Protocol, a cautious investment strategy would focus on a short-term approach to navigate the potential volatility. While the historical prices show some upward movement, the recent 2-week price change indicates a slight decline. The forecast suggests a further consolidation around the current price level, with potential for minor fluctuations. Therefore, a short-term long position could be considered with an entry price around $5.15, aligning with the forecast. The stop loss should be set at $5.02, the recent low point, to protect against potential downside. The target price could be set at $5.44, the recent high point, aiming to capitalize on a short-term price rebound. This strategy allows for potential gains while mitigating risk by limiting exposure to larger market movements. Given the price trends and forecast for Internet Computer, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a relatively stable range with minor fluctuations, indicating a lack of strong momentum in either direction. The forecast suggests prices will remain within this range, hovering around $10. The support price is at $9.903, providing a cushion against significant downside, while the resistance at $11.791 limits potential upside. In this scenario, a neutral stance with a small long position is advisable. An entry price of $10 would allow you to capitalize on any slight upward movement, while the stop loss should be set at $9.90 to minimize risk. The target price could be set at $10.10, aiming for a modest profit within the expected price range. This strategy prioritizes risk management and capital preservation over aggressive returns, suitable for a short-term investment horizon. Based on the provided injective data, a cautious short-term investment strategy is recommended. The 2-week price history reveals a downward trend, and the forecast anticipates further declines. The current price is near the support level of $19.69, suggesting potential for a temporary bounce. However, the forecast indicates a continued downward trajectory, making a short position more attractive. An entry price of $20.50 would allow you to capitalize on a potential pullback from the support level. A stop-loss order placed at $21.50 would help mitigate risk if the price unexpectedly rises. The target price should be set at $18.50, aiming to profit from the forecasted price decline. This strategy prioritizes risk management and capitalizes on the anticipated short-term bearish momentum of Injective. Based on the provided BTC price history and forecast, a medium-term investment strategy appears most suitable. The price history demonstrates volatility, with fluctuations between approximately $440 and $520. The forecast indicates a gradual upward trend, suggesting potential for growth over the next few weeks. Considering the support price at $503.40 and the resistance at $558.90, a medium-term approach allows for capitalizing on this upward momentum while mitigating the risks associated with short-term volatility. Therefore, an investment strategy for BTC should involve a long position. A suitable entry price would be around $475, a stop loss at $460 to protect against unexpected downturns, and a target price of $520 to capitalize on the projected upward movement. This strategy aims to balance risk and reward by entering at a relatively conservative price point, setting a protective stop loss, and targeting a price level that aligns with the forecast's bullish sentiment. Given the price trends and forecast for THETA network, a medium-term investment strategy focusing on a long position appears promising. While the 2-week price change shows some volatility, the forecast suggests a steady upward movement over the next week. The current price is close to the support level of $2.376, indicating a potential buying opportunity. The resistance at $2.732 suggests a reasonable upside target. Therefore, an ideal entry price for a long position would be around $2.30, aligning with the recent price action and providing a buffer below the support level. The stop loss should be set at $2.25 to limit potential losses in case of an unexpected price decline. The target price could be set at $2.55, aiming to capture a significant portion of the anticipated upward movement. This strategy allows for a medium-term hold, capitalizing on the expected price appreciation while managing risk effectively. Given the price trends and forecast for WorldCoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering near the support level of $2.194. The forecast indicates further declines in the coming week, suggesting a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive entry price would be $2.23, slightly above the current price, allowing for some room for price fluctuation before entering the trade. The stop loss should be set at $2.28 to protect against any unexpected price recovery. The target price should be $2.15, aligning with the forecast's lowest price prediction, allowing for potential profits before the market hits major support. This strategy aims to minimize risk while maximizing potential returns in the short term. Hooked Protocol's recent price history shows a fluctuating trend with a slight upward bias. The forecast suggests a slight decline over the coming week, settling around $0.414. Considering this mixed outlook and the proximity to support at $0.3947, a short-term investment strategy with a focus on a short position appears prudent. To execute this strategy, an entry price of $0.423 would be suitable, slightly above the current price and within the recent trading range. A stop-loss order should be placed at $0.431, safeguarding against unexpected upward price movements. The target price for this short position could be set at $0.404, aligning with the support level and the forecasted price decline. This strategy aims to capitalize on the potential for a short-term correction in Hooked Protocol's price while mitigating risk through a well-defined stop loss. Given the price trends and forecast for Artificial Superintelligence Alliance, a short-term investment strategy appears promising. The historical prices show a fluctuating pattern with a slight upward bias. While the forecast suggests a potential dip in price over the next week, it also indicates a possible rebound. This presents an opportunity to enter a short position at a slightly elevated price and exit near the support level. Therefore, I recommend a short position on Artificial Superintelligence Alliance. An ideal entry price would be around $1.32, aligning with the recent price action and the forecast dip. A stop loss should be placed at $1.36 to protect against unexpected upward movement. The target price could be set at $1.28, aiming to capture potential profit from the anticipated price decline towards the support level. This strategy capitalizes on the short-term volatility while mitigating risk with a well-defined stop loss. Given the price trends and forecast for Polkadot, a cautious investment strategy would focus on a medium-term approach. The historical prices show a slight upward trend, but the forecast indicates a potential pullback in the coming week. While the current price is near its support level, the resistance is relatively high, suggesting limited upside potential in the short term. A long position could be considered, but with a cautious approach. An ideal investment strategy would involve entering a long position at $6.85, slightly below the current price, allowing for some downside buffer. The stop loss should be set at $6.68, aligning with the support price and limiting potential losses. The target price could be set at $7.55, representing a potential upside gain based on historical highs. This strategy allows for moderate risk while aiming for a reasonable return over the medium term. The recent price history of Filecoin shows a fluctuating trend with a slight upward bias. While the forecast predicts a slight increase in the coming week, the price is currently hovering near its support level. Considering the limited upward potential and the risk of a potential pullback, a short-term neutral to slightly bearish outlook appears more suitable. Given this outlook, a conservative strategy would involve a short position with an entry price around $4.95, aligning with the current price and the lower end of the forecast range. A stop loss could be placed at $5.13, slightly above the recent resistance and the highest point in the forecast, to limit potential losses. The target price would be set at $4.83, slightly below the historical support level, aiming to capitalize on a potential retracement. This strategy prioritizes risk management and aims for modest gains in a volatile market environment. Based on the provided Conflux data, a cautious short-term investment strategy appears most suitable. The historical price data demonstrates a slight upward trend, but the forecast suggests a potential pullback in the coming week. While the support price sits at $0.1598, providing a potential floor for the price, the resistance at $0.1982 indicates a ceiling for upward movement. Given this context, a short position could be considered to capitalize on the anticipated price decline. An entry price of $0.164, near the recent historical high, would allow for a potential profit if the price drops towards the forecast levels. A stop loss at $0.167 would protect against unexpected price surges, while a target price of $0.157, aligned with the support level and the lower end of the forecast, could be set to secure profits. This strategy emphasizes risk management and capitalizes on the potential for a short-term price correction. Given the provided price history and forecast for Ethereum name service, a medium-term investment strategy appears most suitable. The historical price data shows fluctuations within a relatively narrow range, indicating a period of consolidation. The forecast suggests a slight upward trend, with prices potentially reaching around $36 to $37. This suggests a potential for modest gains in the coming weeks. Therefore, a long position in Ethereum name service is recommended for a medium-term investment horizon. An ideal entry price would be around $33.50, slightly below the current price, allowing for a small margin of safety. The stop loss should be set at $32.88, the identified support price, to limit potential losses. The target price could be set at $36, aligning with the upper end of the forecast range, aiming for a reasonable profit. This strategy allows for capital appreciation while managing risk through a well-defined stop loss and a realistic target price. Based on the provided avalanche price information, a cautious yet potentially rewarding investment strategy emerges. The historical price data reveals a recent consolidation phase, with prices fluctuating around the mid-30s. The forecast suggests a slight pullback in the coming week, hovering around $37. This indicates a potential opportunity to enter a long position, aiming to capitalize on a potential rebound towards the resistance level of $44.63. A conservative entry price of $36, slightly below the current price and the support level, would allow for some margin of safety. The stop loss should be set at $35.81, the identified support price, to minimize potential losses. The target price could be set at $40, aiming for a moderate gain while allowing room for price fluctuations. This strategy focuses on a medium-term investment perspective, anticipating a gradual upward trend in Avalanche's price over the next few weeks. Given the price trends and forecast for Bitcoin, a medium-term investment strategy appears suitable. The historical prices show a recent dip, but the forecast suggests a potential upward movement over the next week. The support price of $0.04337 provides a safety net, while the resistance price of $0.05297 indicates the potential for growth. Therefore, a long position is recommended to capitalize on this potential. An entry price of $0.0455 would allow you to buy in at a relatively low point, while a stop loss of $0.0434 would protect against unexpected drops. The target price should be set at $0.0495, aiming to capture a significant portion of the predicted upward movement. This strategy balances risk and reward, allowing for potential profits within a medium-term timeframe. Based on the provided data for PENDLE, a cautious short-term investment strategy appears most suitable. The 2-week price history demonstrates a volatile trend with a slight downward bias. While the forecast suggests a continued decline over the next week, the price remains relatively close to its support level of $4.893. This proximity to support indicates a potential for a temporary rebound before further downward movement. Therefore, a short position is recommended, aiming to capitalize on the anticipated price decline. A conservative entry price of $5.05 would allow for a slight buffer above the current price, while still benefiting from the downward trend. The stop loss should be placed at $5.15 to minimize potential losses if the price unexpectedly surges. The target price can be set at $4.90, aligning with the support level and allowing for a reasonable profit margin. This strategy emphasizes risk management by implementing a stop loss and focusing on a short-term timeframe to navigate the volatility of PENDLE. The sandbox's recent price history shows a slight downward trend, but the forecast predicts a gradual upward movement over the next week. The support price is at $0.5423, indicating a potential floor for the price, while the resistance is at $0.699, suggesting an upper limit for the foreseeable future. Considering these factors, a medium-term investment strategy with a long position seems appropriate. To execute this strategy, an entry price of $0.570 could be considered, allowing for some room to enter below the current price while still benefiting from the predicted upward movement. A stop loss at $0.545 would protect against significant price drops, while a target price of $0.620 aims to capture a substantial portion of the potential price appreciation. This strategy balances risk and reward, aiming to capitalize on the projected upward trend in the sandbox over the next few weeks. Based on the provided information for Decentraland, a cautious short-term investment strategy appears most suitable. The historical price data shows fluctuations, but generally lacks a clear upward or downward trend. The forecast suggests a slight dip in the coming week, with prices potentially falling below the current level. The support price at $0.4692 acts as a potential floor, while the resistance at $0.5921 indicates a significant barrier for upward movement. Considering this outlook, a short position on Decentraland could be considered for a short-term gain. An entry price around $0.500 would allow for capturing potential downward movement. Setting a stop-loss order at $0.515 would mitigate risk if the price unexpectedly rises. The target price could be set at $0.480, aiming to profit from the predicted price dip. This strategy prioritizes risk management and capitalizes on the anticipated short-term decline in price. Based on the provided price information for ENG coin, a short-term bearish strategy appears to be more suitable. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines. The price is currently hovering near the support level of $0.2107, suggesting potential for further downward movement. The historical prices also indicate a recent peak around $0.246, followed by a consistent decline. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price of approximately $0.219. A stop-loss order should be placed at $0.227 to limit potential losses if the price unexpectedly surges. The target price could be set at $0.205, aligning with the lowest predicted price in the forecast. This strategy aims to capitalize on the anticipated price decline and secure profits before the price potentially finds support at the identified lower level. Based on the provided price history and forecast for Uniswap, a cautious investment strategy with a short-term perspective appears most suitable. The recent price history reveals a consolidation pattern around $13, with slight upward movements. While the forecast suggests a potential increase towards $14, the historical data lacks a strong upward momentum to justify a long-term investment. Therefore, a short-term strategy with a long position would be recommended. An entry price of $13.1 could be considered, allowing for some room below the current price. The stop loss should be set at $13 to minimize potential losses if the price declines. The target price could be set at $14, aiming to capitalize on the predicted upward movement in the forecast. This strategy aims to capture a potential short-term price increase while managing risk through a tight stop-loss order. Given the price trends and forecast for Chainlink, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $21.62. The forecast suggests a continued downward movement in the coming week, indicating a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $22 would allow you to enter the trade at a slightly higher level, while the stop loss should be set at $22.50 to protect against any unexpected price surges. The target price could be set at $20.50, aligning with the forecasted price and providing a reasonable profit margin. This strategy aims to capitalize on the short-term downward momentum of Chainlink while mitigating risk through a well-defined stop loss. Given the price trends and forecast for Aave, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a slight upward trend with fluctuations, and the forecast indicates continued upward movement, albeit with some volatility. The current price is situated close to the support price, suggesting a potential buying opportunity. The resistance level, while not immediately reachable, provides a target for potential price appreciation in the medium term. Therefore, a long position is recommended for Aave. An entry price of $325 could be considered, aligning with the current price range and allowing for some room for price adjustment. A stop-loss order at $309, below the support price, would help mitigate potential losses. The target price could be set at $350, aiming to capture a portion of the potential price appreciation towards the resistance level. This strategy allows for potential profit while managing risk within a medium-term timeframe. Based on the provided price information for EOS, a medium-term investment strategy appears most suitable. The historical prices show a fluctuating trend, with recent dips towards the support price of $0.7713 and subsequent rebounds. The forecast suggests a slight upward movement over the next week, with prices potentially reaching the resistance level of $1.0388. Considering this, a long position is advisable. An ideal entry price for this strategy would be around $0.810, allowing you to capitalize on the potential price increase while minimizing risk. The stop loss should be set at $0.780 to protect against unexpected price drops. The target price can be set at $0.900, aiming to capture a significant portion of the potential upward movement. This medium-term approach allows you to benefit from the anticipated price increase while managing risk effectively. Given the price trends and forecast for Tron, a short-term investment strategy focusing on a long position appears promising. The historical prices show a consistent upward trajectory, and the current price is near the support level of $0.2444. The forecast indicates continued upward momentum, suggesting a potential price increase towards the resistance level of $0.2977. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current market price, around $0.256. A stop-loss order should be placed at $0.245 to protect against unexpected price drops. The target price should be set at 27 cents, aiming to capitalize on the forecasted price increase and secure profits before reaching the resistance level. This strategy allows for potential high returns within a short time frame, taking advantage of the bullish sentiment surrounding Tron. Based on the provided information for Suncoin, a medium-term investment strategy appears most suitable. The historical price data reveals a consistent upward trend, with recent price action hovering around the support level of $0.02442. The forecast predicts further price increases, reaching $0.028 within the next few weeks. This suggests a bullish outlook for Suncoin in the medium term. Therefore, a long position is recommended. An ideal entry price would be $0.0246, slightly above the current price and close to the support level. This allows for a margin of safety while capturing potential upside momentum. The stop loss should be set at $0.0244, just below the support level, to minimize potential losses. The target price could be set at $0.0265, aligning with the forecast and offering a reasonable profit margin. This strategy allows for capital appreciation while managing risk effectively within a medium-term timeframe.